Hey there, I'm Apple Kreider with Investing Simple. In this video, we're taking an in-depth look at the question of how does margin work on Webull? This is a question that a lot of beginners have when they're getting started in the app. They see this margin option, they're wondering, how does this work? Should I use it? So we're gonna be covering all of that in this video right now. So first off, I want to talk about what margin accounts actually are. So margin, as a quick definition here, that is when you're buying stocks with borrowed money. So if you are going to someone saying, hey, give me $1,000, I'm going to go buy some stocks, that is investing on margin. And a margin account is a place where you can do this. Now, just from hearing that explanation, you can probably tell this is a bit of a risky way to invest because you are taking someone else's money. You're now responsible for paying that person back, and then you're putting that money into the stock market, which is volatile. And so this is definitely a risky strategy that beginners are going to want to be very wary of before they kind of dive headfirst into margin. Now, with that money that you've borrowed, you're actually going to be paying interest on that money, okay? Because the person who lent it to you wants some kind of return on their money. And so you're paying them a consistent interest rate on the funds that you borrowed. Whether the stock goes up or it goes down, you are still going to be owing interest to that person you borrowed it from. This also means the longer you hold the stock, the more interest you're going to owe because every single day that interest is building up. Now, another thing to keep note of here is that when you borrow money to invest with, the person that you borrowed it from can also ask for that money back at any point in time. This is called a margin call, okay? And if they feel that your position has gotten too risky, if it's gone down too far, they could issue you a margin call and say, hey, you need to do one of two things right now. You need to either sell your stock and pay me back, or you need to put more money into this so that I don't feel like it is as risky for me, okay? Because their main focus is getting paid back. And so if that stock starts going down in value, if it's like very fluctuating, they are going to want to make sure that their investment is secure and that their loan that they've made to you is not going to default. So they are going to issue a margin call, and that could potentially force you to sell your position at a loss. Additionally, in some cases, they might not even issue you a margin call and they might just sell your position for you. So if you are investing with borrowed money, they can sell that position for you at any point. Webull can just say, hey, you're done. We're selling this. You're taking your loss. We're taking our money back and we're just calling it a day. So you need to be very wary of that from the get-go because if you're investing in things that are very volatile, there's always the potential for them to sell your investments without even warning you first. So now you understand how margin actually works. Let's talk about the different account types offered on Webull. Okay, you've got your margin accounts, your cash accounts, and your retirement accounts. And we're not going to worry too much about retirement accounts for this video. We've got a bunch of other videos on how retirement accounts actually work. You can find one of those up here. But for this video, let's just stick to cash and margin. So with a cash account, you can only trade the settled funds in your actual account. So you know if you've invested before, when you deposit money into your account, it takes a couple days for those funds to actually settle. So with a cash account, you can only invest those settled funds into different stocks. With a margin account on Webull, however, you can actually trade 4 times the value of your settled funds. So for example's sake, let's say you have $2,500 in your Webull account. They are actually willing to extend you credit for $7,500 additional dollars, meaning you can trade with up to $10,000 worth of buying power within your Webull account with just $2,500. So clearly this is a risky position for Webull because they have a lot more money on the line than you do, and if that stock starts going down in value, you can bet they're going to want to be getting paid back as soon as possible. Now, this 4 times margin is only allowed during the day, so overnight the margin requirement is 2 times. You can only have twice your account value in buying power for margin overnight. So if you got that $2,500 in your account, you can only have $5,000 overnight. The $10,000 is only during the trading day. Now, on top of that, there are a couple important margin requirements that Webull does set in place to protect both themselves and you. Now, the first of which is you need a $2,000 account minimum in order to trade margin on the platform. So if you don't have $2,000 in your Webull account, you cannot have a margin account and they will not extend you any margin to trade with. Now, once you're actually trading on margin, your interest is going to be calculated on a daily basis. So every single day, depending on how much money you have borrowed, they're going to add it to your interest balance. And then every single month, they're going to send you a bill that you're going to owe for that interest for the last month. Now you should keep in mind here that Webull's margin rates can change at any point in time without any warning. So they set the rates, they set the interest rates that you're borrowing from them at, and they can change that at any point in time. Now, at the moment, the more money you borrow from Webull, the lower the rate is going to be, and that's pretty standard across the industry. So if you're borrowing a larger amount of money to invest with, they're going to give you a lower interest rate on that money. But again, that can fluctuate at any point in time. Webull can decide, hey, we want to raise your interest rate, and they don't have to give you any advance notice on that. So now let's talk about the risks of investing with margin. There's 3 main risks that you're going to want to watch out for on the Webull platform when it comes to margin. The first of which is that you make a bad investment, okay? Because if you make a bad investment on margin, you're losing the money you invested, which is potentially more than you bargained for, and you're also losing that interest payments that you're going to be owing to Webull for the privilege of borrowing that money. So you're kind of losing twice on that and potentially even more because Let's go back to our first example where you had $2,500, you borrowed an additional $7,500 from Webull, bringing you up to $10,000. Now, if you invest that $10,000 in something and it goes down by 25%, it's now only worth $7,500. Now, all $7,500 of those dollars are going back to Webull because they lent you that money. They want to get paid back in full. And so you paid them $7,500. You also now owe them interest. So you're out more than you even started with. So you're going to want to be very, very careful with margin because it's very easy to kind of get carried away there and lose a lot more than you bargained for. The second risk is a margin call like we talked about earlier, okay, where Webull says, hey, we don't think you're being safe enough right now. This is getting a little bit risky for us. So we're going to need our money back, or we're going to have to put more money into this investment, which is not a great situation because it might force you to sell at a loss, or it might force you to pump more money into a losing position. Now, the last risk just has to do with your stress levels, okay? Because when you're investing on margin, odds are you're going to be a lot more stressed out than the average person that's just investing their dollars themselves, because you now know that you are leveraged up on this position and you could potentially lose a lot more than you thought you were going to. So just make sure that if you are investing, you're very educated on what you're doing. You have a lot of experience in the markets, because if you don't, this could be a huge stress point that could potentially lose you thousands of dollars. Now, if you want to learn more about margin on Webull, we have a full comprehensive article on our website, investingsimple.com. The best way to find that is to head on over to Google, type in how does margin work on Webull, and click on the link for investingsimple.com. We will see you over there.